Hey everyone, welcome back to Wallet Watch USA, the channel where we connect the dots between corporate headlines and how they affect you, the workers, the families, the everyday Americans trying to keep up. Today we're going to be talking about two big stories that hit this week, both with one thing in common. People are paying the price for decisions made at the top. The first from Target corporations, and the second one will be from the Affordable Care Act marketplace in Florida. Two headlines, two different worlds, but both pointing to the same problem. So when large systems start shaking, the people holding them up get hit the hardest. According to the Associated Press, Target announced it will cut about 1,800 corporate jobs, roughly like about 8% of its global headquarters workforce. And what the company calls a move to simplify operations and accelerate decision making, according to the Reuters, these layoffs include around 1,000 current employees and another 800 open positions that will be eliminated. This one is one of the biggest shakeups Target has made in nearly a decade. Now, these cuts don't hit the store clerks or warehouses workers. They are corporate employees, the planners, the analysts, the marketers, the people who help the business functions behind the scenes. The company's new CEO, Michael Federger, said in a memo that Target has become too layered, too slow, and needs to become a simpler and more agile. That sounds reasonable on a paper, but here's what it means in reality. For 1,800 people, that simplicity just become unemployment. Think about it. You have worked years in a corporate role, maybe hybrid or remote. Then suddenly, you're told your position is being streamlined. You pack your desk, you close your laptop, and you start wondering, what now? And even for those not directly laid off, it creates uncertainty, anxiety, and lower morale. When a company cuts this deep, everyone left behind looks like around and wonders, am I next? Target says this will make them faster and more efficiency, but efficiency often comes with a cost. And the truth is, that cost is usually paid by the people who had no say in the decision. So what does this mean for everybody, for everyday shoppers like us? We might see fewer in-store staff, fewer promotions, and maybe subtle changes in the store experience as Target realigns its focus. And here's the reality. When major corporations start cutting at the top, it's often the first sign that the consumer spending has slowed and the company and the economic is tightening. Now let's move to our second story. This one hits right in the wallet for millions of families across the Sunshine State. According to the New York Times, residents in Florida who rely on Affordable Care Act marketplace insurance are facing potential premium spikes of up to 30% next year, as enhanced federal subsidies are set to expire very soon. These subsidies, first expanded under the 2021 American Rescue Plan, help millions of middle-class families afford monthly premiums. But now, unless Congress renews those subsidies, people could see their monthly payments double, even triple. According to the Times in Florida, the state with the largest ACA enrollment in the country, around 4.7 million people, will be among the hardest hit. Let's make it real. Imagine a couple in Orlando paying about $350 a month for their health care plan. Without subsidies, that same plan could jump up to $700 or more. That's not just a line item, that's a car payment, that's groceries. That's what a family depends on stay afloat. And here's what's worse. According to the same report, many of these Floridians aren't rich. They're middle income workers who don't qualify for Medicaid but still can't handle thousands of dollars premiums. For them, losing that subsidy could mean losing coverage entirely. So you got the hardworking Americans forced into an impossible choice: pay the rent or keep the insurance. And if that sounds extreme, it's already happening. Florida's told the Times that some insurance have begun notifying consumers about anticipated adjustments. Translation: price hikes are on the way, and millions may soon learn what that really means. Now, you might be wondering, what do Target layoffs and Florida healthcare crisis have in common? So the answer is instability. Both stories show how easily stability can vanish. One week, you have steady jobs. The next, an email answered. 1 year, you can afford the healthcare plan. The next is out of reach. These stories tell us something about where we are right now in America. The safety nets, jobs, insurance, affordability are all being tested. For the layoff of Target employees in Minneapolis and the family in Miami facing a $900 health premium, the fear is the same. What happens in the system stops protecting me? I'll be honest, both these stories hit me very hard because behind the numbers, there is emotions. There's the anxiety of people trying to hold on to what they built. I get why Target's making cuts. It's a business move. And I get that federal budgets shift and subsidies expire. But it feels like we're living in an era where working people are constantly forced to adapt, while corporations and politicians adjust the rules from above. The message I take from both stories: don't wait for stability to come back. Create your own plan, budget early. Check your benefits. Keep learning and stay flexible. Because the systems we always trust, they're not as stable as once thought, So whether it's losing a job or paying more for healthcare, these stories remind us how fast things can change. What about you? Have rising costs or company cuts hit home for you lately? Share your thoughts below, because your story might speak for a lot of people out there. So thanks for watching, and as always, watch your wallet and watch the world. Thank you. See you next time.